Hi everybody, and welcome back to FANG Friday. This is Ross Healy. I'm the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol and Associates Asset Management. Well, first of all, let me wish you a happy new year, indeed a happy and a prosperous new year. I don't know whether this year is going to be as fulfilling from a total market point of view as last year's. Indeed, the caption on our January market letter to all of our clients is, "The market is not a perpetual motion machine." So we need to be a little bit careful when we get to very high levels. Well, we were just about to send out the market letter when, virtually out of the blue, came the news that Iran had sent a missile into the really major American military base in Baghdad in retaliation for the drone killing of their top military general. And the immediate question is, does this throw everything into a cocked hat? What does this change? Well, luckily, and I don't know why CNBC would be ready to roll with this stuff, but turning here to this first slide, oil stocks are winners following the Middle East crisis. We see what happens to markets following Middle East crises, typically, of course, involving oil. Well, oil stocks are the big winners. Gold, one would think, would do very well and does initially very well, but not in the longer term sense here. What does it mean for the overall market? Well, of course, there is a kind of a flight to safety, as it were, and the American dollar, and indeed, I suppose, the American market could be considered a flight to safety. But really, how much of a flight are we talking about? Well, historically, the gains after 1 month are less than 1%, and after 3 months are actually less than 3%. We would suspect that something along this kind of a line, a very tepid response, is more likely the case, given how extremely expensive the stock market is right now. However, nonetheless, it does show that there is some potential gain for the S&P 500. So let's go and take a look at the FANG stocks and see what we might be able to expect from them. So turning first to Amazon. Amazon has, after this long period of sort of moving sideways, Amazon has been moving back up again to its HB3 breakpoint, which is roughly 16 times book value. And it kind of looks like it wants to go there, and indeed I would guess that if the S&P has some strength left in it, then it may well get there. As far as Facebook is concerned, just look at that chart. The stock just continues to hover right around its mid-super growth price. That's 5.5 times book value. Doesn't really want to gain any head of steam above, nor when it gets below does it seem to want to get any head of steam down to the next breakpoint level. So far, all we can do is say, well, maybe it'll follow the MSG price. And I've said to you before that the slope of that price, which tells you, by the way, on an annual basis, how fast the balance sheet is growing, and therefore, if a stock price sticks to the balance sheet multiple, how fast the stock price might go, it is about 16% per annum. So if you were to hang on to Facebook and nothing untoward happens, either up nor down, you might look forward to an annualized rate of gain of 16%. However, the operative word is as long as the price sticks to that MSG price. Alphabet, well, there's Alphabet right up against its supergrowth price. That's 3.5 times book value. And as I've showed you before, in a 10-year look at Alphabet, the supergrowth price, the mid-supergrowth price, which is 4.5 times book value, has tended to be about the high for the shares. So I do not anticipate anything more than its supergrowth price at this moment. Netflix, well, Netflix, had a kind of a rocky go around its HB3. Again, that's 16 times book value, falling below, rising above, falling back, up and then back again, technically kind of being drawn back towards the HB3. Of late, however, the stock appears to be gaining some head of steam. And perhaps if we're going to have a strong-ish market, a rising market, perhaps the stock can actually recover as far as the HB4. We certainly would have what we would say would be a sort of a confirmed buy on the stock, which is to say 3% above the break point, staying for 5 days. Today, with all that bad news, Netflix actually hung in fairly well, I think being off less than about 1%. Here's Nvidia right up now against its HB2. Here's the 2-year view of the stock, and you can see that the HB2 has been quite strong resistance for this stock now over that period. As a consequence, we don't actually anticipate that there's going to be a breakout here, although, of course, we will watch very carefully for one to see whether the stock is actually capable of moving up one more breakpoint. It's already moved up 2, having corrected 4 here, down 4, up 2, back and up 2 again. We'll be watching very carefully to see whether the stock has got the oomph to actually break out and go further. Here's the long-term view of Apple, which, as I've said many times before, the stock looks very extended on a long-term point of view. But if we look at the 1-year chart of the company, we can see that a couple of things. First of all, the earnings forecasts here, and therefore the fair market value, which is this dotted line of the stock, is now rising a little bit faster, and perhaps now the stock having broken out over its HB1, perhaps it will have enough strength to get to the HB2. That would be, historically, by the way, extremely extended. Finally, Microsoft. Well, we have been watching Microsoft, haven't we now, for a long time. And the stock has been hard up against its HB1, that's 10 times book value, and just has not been able to break out. But then, of late, the stock actually did, and we kind of wondered what would happen at that juncture. Well, it broke out, pulled back, a kind of a very typical technical pattern, by the way, and of late, now the stock has now given us a buy signal, given us, that is to say, a move that's 3% above the breakpoint and holding for some 5 days. Now, I will have to say that the HB1 was a very, very long-term peak for the stock, and therefore it would be my supposition that this would be what I would call a kind of a high-risk speculative move. But nonetheless, if you were to get into the stock here on this breakout, you'd have to say, well, look, what's my downside risk? Well, it's right now, it's currently to $151, down from actually $159 today with the sell-off in the market. So about an $8 downside risk, and the upside to $194. So that's pretty close to not it certainly is a good 35 to 40 points on the upside, offering you a decent potential. Again, high risk because the stock hasn't been here for a very long time, but nonetheless, from the technical SVA point of view, we actually have been given a buy signal on Microsoft. Anyway, that's it for this edition of FANG Friday. Some promise in some of these stocks, some risk, I think, in others, and of course, overall, we will be fascinated to see what the follow-through is from today's action in the Middle East. At any rate, this is Ross Healy, and I'm the chairman of Strategic Analysis Corporation and a portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I will see you next week when we see what kind of follow-through comes from today's action.